Hi, welcome to today's edition of Market Analysis Pre-Market for today, August the 31st, and on the month. I'm Giovanni Benacourt, operator and educator with Vantage Markets. You know, since Mr. Powell's Jackson Hole speech, stocks have tumbled as investors gear up for more steep rate hikes. But Wall Street says markets aren't down and out just yet. Even as a historically dead on bad news signal just blared and tickers are as red as hot iron, this key research indicator just flashed. Every single time jobless claims have jumped 10% or more above their prevailing 3 month average, the economy ended up tipping into a recession. And that's exactly what just happened. There have been no false signals with this indicator, unlike the shape of the yield curve or the money supply, which are leading indicators. This one is more coincident. Contradictory data highlights that Wall Street's fear gauge, the VIX, isn't as high as it should be, which suggests markets are getting complacent. Right now, VIX indices for the S&P 500, Nasdaq, and the Russell 2000 are all trading slightly above their long-term averages and well below a one standard deviation reading. The rampant uncertainty with markets, the Fed, and the economy should mean the fear gauge is higher, but that isn't the case. In our view, U.S. equities do not reflect sufficient fear given currency macro and micro uncertainties. And yet, investors shouldn't rush to sell their stocks because the same jobless indicator has also historically pointed to more upside in the market. When it hit that 10% mark, analysts said that the S&P 500 went on to return an average of 11% over the next 12 months. And that's according to the data. Now, what's more resilient, corporate earnings have helped the market even as inflation and recession concerns weigh on investors. In effect, Wall Street's top brass seems to be suggesting that a recession could be imminent, but that does not mean that stocks can't climb higher. And with that in mind, let's take a look at what we can expect for today's market fluctuation. Now, the reading for the Nasdaq just it has really traded sharply off its recent high of August 16th of 13,750, down all the way down to 12,240. From here, it has retraced, it has recouped, it has recovered, but my pivot, my psychological resistance of 12,500 is acting as that as a resistance. I have my support of 12,000, and now should we come down and break that support, then we could probably be visiting that June 16th lows. All right, so perhaps right now the market is not even in oversold territory, so perhaps another pullback could be in effect, or the market will just probably just be fluctuating, just really consolidation around the pivot point. Our S&P 500, the same scenario, 3,950 is my support. Market is looking to retrace, to recoup some of this lower movement. I have my 50-day moving average, exponential moving average, right trading right above my pivot point, which acts as a dynamic resistance. So we first have to get to it to see if we can even come to a break it. The moving average of 200 is getting closer to the 50, but still is some way to go. Let's take a look at crude oil after such a great movement yesterday on crude oil. Crude oil has just really retraced all of this movement back down towards the 88 handle. Now it's looking to recoup that, and it is trading above our pivot point of 90 psychological barriers, which now is acts as a support. But we have very closely our 92 resistance level, which it was taken out from this consolidation stage, ranging lateral of movement previous on the market. So perhaps the market will just come to that and retrace from here. Then we have gold. Gold has also been turning down to the downside. 1700 is my psychological support level. 1710 right now is what the market is looking to hold. And so perhaps the market will sustain this this movement and just stay around this level above 1700. Now, here's the thing about silver. Silver has been just really just came back all of its movement, previous movement from last month. So it revisited last month's lows, okay, and since last year, we haven't seen silver this low. Take a look. Take a look. Take a look at the price of silver. It has never been hasn't been not never hasn't been this low since a long time. Let's see since when. Okay, here our resistance since really 17 around July 2020. That's around that area when it came down towards this level of $17, breaking the $18 barrier. So it's been 2 years since it hasn't been this low. So would it sustain? Would it continue to move even lower? Well, we gotta stay close and see if it does that. But I will say that it has found support. It will find support around these levels, and then it'll look to trade back up again. So be careful on that one if you're gonna continue going short. All right, so we have here copper. Copper also have broken my pivot point of 350, looking to come down towards my support of 330. So, the average 50-day moving average is acted as a dynamic resistance, but I will assume that the market has come to find some support around 344, and then is retracing back up that previous movement to the low side. Then we have Bitcoin. Bitcoin is really just lingering around the 20,000 mark, trying to sustain around that level, not trying to come down towards the 19,000, 18,000. Just really just steadily holding that 20,000 mark. Then we have also Europe, really Europe also trying to hold for dear life for the parity value of 1 against the US dollar. But if the US dollar index breaks that resistance level of 19 or 109 and trades above to 109,500 to 110, we're gonna be seeing a lower euro and perhaps gold breaking our 1700 mark of support. All right, well, that's it for today. Keep your eyes wide open and see if the markets could probably bring this momentum into the open and trade higher throughout the day. All right, that's it for today. I'll talk to you later. Have a nice day.